The US-China rivalry is escalating once again, and this time, China isn't holding back. Beijing has made its stance crystal clear. If war is what the US wants, be it tariffs, trade, or any other form, we're ready to fight till the end. This bold declaration has sent shockwaves through global markets, raising concerns about whether we are on the brink of a full-scale trade war. With new economic measures in place, businesses and consumers worldwide are feeling the pressure. Prices are rising, supply chains are shifting, and geopolitical tensions are reaching new heights. But who really stands to lose the most in this battle for economic dominance? Is the US tightening its grip, or is China outmaneuvering its rival on the global stage? In today's video, we'll break down the latest developments, the real impact on everyday people, and what the future holds for the world's two biggest superpowers. Let's dive in. The US-China trade war. A quick recap. The trade tensions between the United States and China have escalated significantly in recent years. In 2018, under President Donald Trump, the U.S. imposed tariffs on Chinese goods, marking the beginning of a trade war that has continued to evolve. These measures targeted a wide array of products, aiming to address trade imbalances and intellectual property concerns. The key industries affected by these tariffs include technology, manufacturing, and agriculture. In the technology sector, companies faced increased costs due to tariffs on components and finished products, leading to higher prices for consumers and disruptions in global supply chains. Manufacturing industries experienced similar challenges, with increased production costs affecting competitiveness. The agricultural sector was notably impacted as China imposed retaliatory tariffs on U.S. exports such as soybeans, corn, and pork, leading to significant revenue losses for American farmers. These trade policies have had broader implications for global markets and inflation. The imposition of tariffs contributed to increased costs for businesses, which were often passed on to consumers, leading to higher prices and inflationary pressures. The uncertainty surrounding trade relations also led to volatility in financial markets, affecting investor confidence and economic growth prospects worldwide. In 2025, the trade war intensified further. President Trump implemented new 25% tariffs on imports from Mexico and Canada, while raising levies on Chinese goods by another 10%, initiating new trade disputes with the three primary U.S. trading partners. In response, China imposed a 15% tariff on U.S. agricultural products, including chicken, wheat, corn, and cotton, effective March 10, 2025. The escalation of the trade war has raised concerns about its long-term impact on the global economy, with potential consequences for employment, consumer prices, and international trade relationships. As both nations continue to implement and respond to trade policies, the ripple effects are felt across various sectors, underscoring the interconnectedness of the global economy. China's latest warning: what it means. In recent developments, China has adopted a more assertive stance in its economic strategy, signaling a significant shift in its approach to international trade and finance. This change is characterized by a focus on self-reliance, diversification of trade partnerships, and the promotion of its digital currency, strengthening domestic production. China is actively working to reduce its dependence on U.S. imports by bolstering domestic production. A notable example is the agricultural sector, where China has increased its grain stockpiling budget by 6.1% to 131.66 billion yuan, $18 billion for 2025. This budget aims to enhance food security amid escalating trade tensions. The country has set an ambitious annual grain production target of approximately 700 million metric tons by 2025, reflecting a strategic move to decrease reliance on imports from nations like the U.S. and Brazil, which collectively supplied over 157 million metric tons in 2024. Efforts to support cattle and dairy industries, reduce soybean meal and livestock feed, and expand oilseed crop cultivation further illustrate China's commitment to agricultural self-sufficiency. Side turn news: deepening trade ties with Brics nations. Beyond its borders, China is strengthening economic ties with Brics nations, Brazil, Russia, India, and South Africa, to create a more resilient and diversified trade network. This strategic pivot aims to mitigate risks associated with over-reliance on Western markets and to foster an alternative economic alliance less susceptible to U.S. influence. By collaborating with these emerging economies, China seeks to establish a multipolar trade environment that can better withstand geopolitical pressures. Promoting the digital yuan. A cornerstone of China's strategy is the aggressive promotion of the digital yuan, ECNY, its central bank digital currency. The digital yuan has been integrated into domestic transactions and is now making significant inroads into cross-border trade. For instance, cities in Jiangsu province are participating in initiatives to use ECNY for international commerce, reflecting the central government's push to elevate the currency's global standing. As a major international financial hub, Hong Kong is poised to play a pivotal role in promoting ECNY in global trade and finance. This move challenges the dominance of the US dollar in international trade and could signal the beginning of a new global financial order. The digital yuan's potential to reshape global trade dynamics is underscored by its increasing adoption and the strategic advantages it offers in reducing transaction costs and bypassing traditional financial systems. Implications for the global financial order. China's multifaceted approach, emphasizing self-reliance, diversifying trade partnerships, and innovating in digital currency, raises critical questions about the future of the global financial system. Could these initiatives mark the onset of a new global financial order where the US dollar's hegemony is challenged? Or will the United States respond with stricter economic policies to maintain its financial dominance? The unfolding dynamics between these two economic powerhouses will significantly influence the structure and stability of international trade and finance in the coming years. What's at stake for the US and the world? This trade war isn't just about Washington and Beijing. It's sending shockwaves across the entire global economy. As tensions rise, businesses, consumers, and governments worldwide are scrambling to adapt to a rapidly shifting economic landscape. The impact on the United States. For the U.S., escalating tariffs mean one thing for everyday Americans: rising costs. Higher duties on Chinese imports lead to more expensive goods, from electronics to everyday essentials. Inflation, already a growing concern, could be exacerbated as companies struggle to absorb these added costs. Industries that depend on Chinese manufacturing, such as technology, automobiles, and consumer goods, are facing supply chain disruptions. Apple, for example, has already started diversifying its supply chain to India and Vietnam to reduce reliance on Chinese factories. But for many smaller businesses that don't have that flexibility, higher production costs could force layoffs or even shutdowns. Financial markets are also feeling the pressure. Wall Street remains on edge as investors worry about prolonged trade uncertainty and the potential for a global economic slowdown. If China retaliates by dumping U.S. Treasury bonds or restricting access to critical materials like rare earth metals, essential for semiconductors and electric vehicles, the U.S. economy could face serious consequences. The impact on China. For China, losing access to U.S. markets presents a serious challenge. The United States has long been one of China's largest trading partners, and any disruption could slow China's economic growth. Export-driven sectors like electronics, textiles, and manufacturing are already feeling the strain. Unemployment could rise, especially in regions heavily dependent on exports. In response, China is accelerating efforts to boost domestic consumption and strengthen ties with alternative trading partners, such as the European Union, Southeast Asia, and Latin America. China is also doubling down on its Belt and Road Initiative, BRI, to build stronger economic relationships outside of U.S. influence. By financing infrastructure projects in Africa, Asia, and the Middle East, China is securing new markets for its goods and reducing dependence on Western economies. For the rest of the world, the U.S.-China trade war brings increased uncertainty. Countries that trade heavily with both superpowers, such as Germany, Japan, and South Korea, must now navigate rising tensions carefully. Supply chain disruptions, currency fluctuations, and shifting alliances are forcing governments to rethink their trade policies. Many nations are also reevaluating their reliance on the U.S. dollar. Could this trade war accelerate the global shift away from the dollar's dominance? China, along with Russia, India, and other Brics nations, is actively promoting alternative currencies for international trade. If more countries choose to settle transactions in yuan, rubles, or other regional currencies, it could weaken the dollar's long-standing supremacy in global finance. At this point, experts are asking a critical question. Is this just a temporary economic dispute, or are we witnessing the beginning of a long-term realignment in global trade? The answer could reshape international markets for decades to come. The future of U.S.-China relations. What's next? Where do we go from here? The economic standoff between the U.S. and China is more than just a temporary dispute. It's a power struggle that could reshape the global order. Both nations are weighing their next moves carefully, knowing that the wrong step could trigger economic instability or even geopolitical conflict. How the U.S. might respond. The United States has several options on the table. One possibility is imposing even stricter sanctions on Chinese companies, particularly in the technology and defense sectors. Washington has already placed restrictions on China's access to advanced semiconductor technology, citing national security concerns. If the U.S. expands these measures to other industries, it could further disrupt China's ambitions in AI, telecommunications, and military modernization. Another likely response is raising tariffs on additional Chinese goods or pressuring allies to take a harder stance on Beijing. The U.S. has already been working closely with the European Union, Japan, and other partners to limit China's economic influence, particularly in areas like rare earth materials and global infrastructure projects. However, there's a risk that continued economic pressure could backfire on U.S. businesses. Many American companies rely on China for manufacturing and exports, and further restrictions could result in supply chain bottlenecks, higher production costs, and job losses. China's strategy moving forward. China, on the other hand, is not backing down. Beijing is strengthening economic ties with Asia, Africa, and Latin America, offering investment and trade deals to nations willing to distance themselves from U.S. influence. This is especially evident in China's Belt and Road Initiative, which continues to expand despite Western skepticism. One of China's biggest moves is the promotion of the digital yuan, which is designed to reduce dependence on the U.S. dollar in global trade. Several countries are already conducting transactions using yuan instead of dollars, signaling a potential shift in global financial power. If this trend continues, the dominance of the U.S. dollar as the world's reserve currency could weaken over time. China is also focusing on self-sufficiency in key industries. The government is investing heavily in domestic semiconductor production, electric vehicles, and green energy to reduce reliance on Western technology. If successful, China could create a parallel global economic system, challenging U.S. leadership in critical sectors. Beyond trade, Taiwan remains one of the biggest flashpoints in U.S.-China relations. The U.S. has reaffirmed its commitment to Taiwan, supplying advanced military equipment and maintaining naval presence in the region. China, in response, has stepped up military drills near Taiwan, warning against U.S. interference. If tensions escalate further, could economic rivalry turn into military conflict? A direct confrontation between the world's two largest economies would have devastating global consequences, from market crashes to supply chain disruptions on an unprecedented scale. One thing is certain: the outcome of this trade war will shape the global economy for years to come. If the U.S. and China find a way to negotiate and de-escalate tensions, the world could see a new era of economic cooperation. But if both nations continue down the path of protectionism and competition, we could be heading toward a more fragmented, unstable global economy. Will this trade war end in compromise, or are we witnessing the beginning of a long-term economic and geopolitical showdown? The world is watching closely, and the next moves by Washington and Beijing will determine the future of international trade and diplomacy. So, is this the beginning of a new global economic order, or just another phase in the ongoing power struggle between the U.S. and China? The world is at a crossroads, and the decisions made in Washington and Beijing in the coming months could reshape global trade, markets, and diplomacy for years to come. Will the U.S. and China eventually resolve their differences through negotiation, or are we on the brink of a full-scale economic war that could divide the global economy? Could China's push for the digital yuan and Brics alliances weaken the dominance of the US dollar? Or will the US maintain its economic supremacy through stronger sanctions and trade restrictions? We want to hear from you. Drop your thoughts in the comments below. Let's get the discussion going. If you found this video insightful, don't forget to like this video to help more people see it. Kane, subscribe for more in-depth global economic insights. Turn on notifications so you never miss an update on world affairs, trade wars, and geopolitical shifts. Thanks for watching, and see you in the next one.